understanding environment and conditions of the market is hugely important, and it's something which can be overlooked when you're trading. You may just be simply looking for a trading pattern to get in, but you must understand what kind of environment you are trading in. Now, two simple examples of environment are if we're in a trending market or a consolidating market. Those are the basics of the conditions and the environment, but we also want to go a little bit deeper than that and look at what zone we are in the market. There's three types of zones. We're either in a positive, neutral, or negative zone, and within that zone we have three positions as well. We're either at the high of perhaps a positive zone, a low of the positive zone, or we're just in the middle. So we need to take into account all of these elements to really understand the conditions which we are trading in on a day-to-day basis. So look, there's no better way than looking at this. Let's go over to the chart and have a look at the DAX of what conditions we've been facing over the last couple of weeks and this week. Okay, so looking at the chart, let's assess what the overall trend is. I like to do that from a mid-term perspective and a short-term perspective because those two things can be different. We're going to look back quite far just to show you a good example of an uptrend. This is clearly an uptrend here, but we're going back to the middle of June. An uptrend really can be defined by higher highs and higher lows. So we've got a higher high, higher low, higher high, higher low, higher high, higher low. So in the midterm, we're moving higher in the market. That was up until about just last week. And within that, we want to assess the zones which are positive, potentially negative, or neutral. So if I'm to look at this, and all of these levels were actually given on the DAX report, that when we were over here, I was saying while we're above 11,800, we're positive in the market with moves to 12,400. So we saw those moves come in. Actually, we saw that move taken out, and we remained above these levels. So if we're in this zone where we are positive above 11,800 and we are predicting a move higher to 12,400, and then I was saying, look, if 12,400 really breaks, we're going to go to 12,800. What do you think we want to do? You'd be right if you're thinking we want to buy. And if you remember from the slides that we also want to assess that this zone here is positive and it can move higher. So where do we want to buy? Do we want to buy at the top of the zone, the middle of the zone, or the bottom of the zone? Preferably, if we want to buy an uptrend in the market, we want to try to buy at the bottom of the zone. If we buy in the middle of the zone, we're adding more risk to our trading that we may have to get stops at a level where the market becomes negative. So where does the market come negative? In this example, I was saying while the market's above 11,800, we're still positive. So we want to get our stops ultimately below that if we do want to trade up higher to these levels. Equally, we need to be careful at the top of the range, of buying in at the top of the range here, because that's the top of the range. That's where we've predicted the market to go in the short term or medium term. Now the market might want to rest. It may want to consolidate, which it did here. It may want to pull back and retrace, which it did both. It actually broke out and pulled back. And we need to be very careful of fake out moves. That actually, if this came up here, touched the level, came back, and then yes, it can potentially go higher, but you can see it broke out again and just faked out, and really you would have to hold that trade for quite a considerable amount of time. So again, just really understanding where you're at. You're in a positive zone, but you're at the top of a positive zone, and the market may be exhausted and it may want to consolidate there for a while and whip people in and out of trades. This is where a lot of money can be lost on stops, getting whipped in and out of a trade on a key level in the market. So the move we want to be in is this nice quick move, and then understand that it may consolidate. So hopefully that makes sense. Then let's have a look at what happened here. 12,400, then the next move was to 12,800. So again, on the reports, really saying that while we're above 12,400, we've got to move to 12,800, which we did. Boom, consolidated, and then it came back to the bottom of the range here. So this is a great buy opportunity. Bottom of the range, we know potentially it's going to be negative if we start breaking through these 12,400. It's going to break this trend up, so we can look for buys and get stops below. And then beyond 12,800, again on the reports from the last weeks, was a move to 13,000, broke 13,000, then we have a move higher to 13,500. So you're always underpinning these levels and just understanding where we are potentially neutral, or positive or negative, and what those support areas are and those zones are in the market. So while we were above here, 13,000, we were calling a move to 13,500, but we broke 13,000 and moved back down to the 12,800. So let's just have a look at what happened there, and that's the action that we've been seeing this week. So we know the market's still positive above 12,800. However, if it does start breaking through there, there's very little support here, and it could drop to the 12,400 levels, which was the previous resistance, which then becomes support. So in this action here this week, I was saying while we're above 12,800, yep, we can move higher. However, we need to break 13,000 to confirm the move higher, and I don't want to get involved in this action. Why? Because if you came down here, you could get clipped out of a trade. We had no official trades for the DAX this week. You could get clipped out. Often the market, you've also got to be very, very careful around key levels that you give yourself enough room. Often retail traders are stopped out of trades and the market moves in their direction just because they didn't give it enough room. Market tests the level, pushes back up, tests it again, takes all the stops out and moves higher. But what we were seeing this week was the market just wasn't getting above 13,000, indicating that it's overall positive, but it's potentially weak. And we were calling actually that on Thursday or Friday that we could see a drop in the market, that the market may squeeze lower, take everybody out. And something that we'll talk about later is that it is the first trading day of the month on Monday, and we could see buyers really come into the market. So that's exactly what we saw. And also be aware that when a level like this is getting tested, it's been tested once, twice, 3 times, 4 times, just sitting on these levels, when it breaks, it can go very, very, very quickly. Often I like to see a level getting tested. And for myself, we just look at this level. On Friday, I was saying while the market can hold 12,730, it can still move higher. If it breaks that, we've got to move to 12,400. So these are on our reports every day. We do all of the heavy lifting, do all of the analysis for you for this. But this type of week will take a lot of people out of the market, and this type of move will wipe out a lot of people. The market dropped from 800 all the way down to 200, 600 points in the market. We'll go into some of those common trading mistakes, but the key thing is really to understand what the market is potentially doing, where it is negative, where it is positive, and where it is neutral, and what type of strategies that you need to use in these different environments. we will use different trades in a trending environment to a consolidating and neutral environment, or perhaps a big trend to the downside. So you'll select the right tools for the environment.